If you want to invest in real estate, you got to have access to more money. And if you don't make a ton of money and you don't have a lot of savings, it's going to be much harder to do this. I do not recommend you go out and do one of those zero down payment real estate deals because it is very risky. How do I know that? Well, I'm going to give you a little bit of inside information. The zero money down real estate deals where you can buy homes with no credit have made me a lot of money, but not in the way that you think. The reason why it's made me a lot of money is because there have been many people that fall into this whole idea. They fall into one of those gurus that sell you this system on how you can buy a home, buy rental properties with no money down, and then you go out, you get in way over your head, you can't make the payments anymore. The banks now are forcing you to sell, and they then come to somebody like me, and they sell me the home for a huge discount, sometimes 50 or 60% off. True story. It's happened multiple times. And so that's why 0% down homes have made me a lot of money, because then when you can't make the payments, the banks are going to force you to sell to somebody else who can afford the home. So that's why I do not recommend you get into real estate unless you have some actual cash to go out and invest. How much cash is going to depend on what types of properties that you're looking to invest in. But I'm going to give you a quick rundown of how it works, because I know the purpose of this video is how can you build this types of generational wealth, even if you don't have a ton of money. But I'm going to show you how it works, because the reality is you get what you prioritize. And some people will prioritize investing in real estate and you're going to find a way to do it. Other people will not, and you're not going to figure out how to do it. There's always a way, you just got to figure out what's important to you. But the way that it works for real estate is you want to go out and buy this property. Now, the purpose of you buying it is not for you to live in yourself, it's for you to rent out to somebody else. Now, when I go out and invest in real estate, my goal is to get a 7% cash on cash return on my money. That means for every $1,000 I invest, I want to see $70 of cash flow every year entering my bank account after expenses. This is not factoring in appreciation. I look at that as icing on the cake. When I do my real estate deals, when I do my real estate underwriting, I'm only looking at cash flow. How much money will this property pay me? Because I can predict that. I can't predict how much this money is going to sell for in the future. Maybe the home value will go up. Maybe the property value will go down. I don't know. There's a lot of factors that can influence that. But I can much better predict what the cash flow is going to look like from the rent. So now, you might be saying, well, Jaspreet, how do you find deals that are paying 7% a year? In my area, they're only paying 1 or 2% a year. You might have to look in different areas. If you're looking in California, or you're looking in Manhattan, or you're looking in Austin, Texas, it's going to be nearly impossible for you to find deals like this. But if you're in Metro Detroit, Michigan, you can find these types of deals all day and night long. So this is where you got to understand, number one, why are you looking to invest in real estate, and where and how do you find these properties? And the last thing that I want you to know about this type of real estate investing is that the advantage of real estate investing is not just the cash flow. You also get the benefits of owning a hard asset and tax breaks. When I say you own a hard asset, now you own something that you can see, feel, and touch. You own the bricks, you own the windows, you own the land. So there's this real value that you can control. Some people hate that idea because when you invest in, say, the Amazon company or the McDonald's company, you don't actually own the building. You own a piece of paper that says you own some ownership in the company, but you don't get to actually own a piece of something that you can see, feel, and touch like you can with real estate. So that means there's less work with Amazon, because if the Amazon CEO gets fired, you don't really stress about it too much. I mean, yeah, maybe it'll affect the stock price, but you don't have to go out and find a new CEO. There's other people that have to do that. Here, if something happens to your contractor or to your property manager, yeah, this affects you because you're the one that's overseeing and managing the operations here. I don't want you to actually manage the property. You want to get a property manager for that. That way it could be more passive. But now you control the operations. And then you also get tax breaks. What do I mean by that? As a licensed attorney, who's not your attorney, what I can tell you is that real estate has some of the biggest and best tax breaks that our tax code has to offer. One of the tax breaks is called depreciation, which means you get a paper write-off. This is not money that you have to pay. This is a tax break that you get on paper only. And you get to tell the IRS, hey, my property is 1 year older. And because my property is 1 year older, I deserve a tax break. I deserve a write-off because of that. Even if your property doubles in value, you still get to take this write-off. That depreciation deduction is the reason why so many real estate investors will talk about how they can make a lot of money and pay little to no money in taxes completely legally. So that's the 3 reasons why people love investing in real estate. You get the cash flow, you own a hard asset, and then you also get the tax breaks. Which brings me to that topic of building a business. Now, this one is the most difficult, the most risky, but also has the most potential upside. And the way for this to really work is to build something that you can pull yourself out of. There's an amazing book on this. It's called Build a Scalable Business. If you have not read that book yet, I highly recommend you read it if you are an entrepreneur. But the whole idea is you want to build a business that you can pull yourself out of. And that means treating yourself like an employee of your own business. Pay yourself a salary, get to the point where your business is making enough money to pay yourself a salary. That way then you can build systems to potentially hire a new CEO. You can kick yourself out and hire a new CEO. Now, if hypothetically your business makes $500,000 a year, and after all expenses, you have $250,000 of expenses, you have $250,000 of profit. Well, now, if you hypothetically could hire a new CEO at a $150,000 a year salary, that means the business is still making $100,000 in profits. This profit goes to the owner of the business. And if you are the owner of the business, well, now you can have a different CEO run the company. You can go move to the beach and still make this $100,000 a year. Is this easy? No, absolutely not. Now, I'm telling you this from experience because I run a company called Briefs Media. I work a lot of hours. I love what I do, so I do it because I really enjoy the work that we're putting out. But it is hard building a business. But for some people, you will love it. For others, you're gonna hate it. If you hate it, don't worry about this. Focus on the stocks and real estate. If you love it, well then understand how you can build a business that has systems, that has a scaling potential. That way, if you ever wanted to step away, you could potentially sell the business, or you could hire a new CEO to take your spot. And that is how you build true generational wealth, because now you own an asset that is paying you with income. And then you can pass on this asset, and the income also goes along with it. That way now your kids, your grandkids, your community, your place of worship, they have an income that they can use to fund their lifestyle, or you could put rules with the right estate planning on how this income has to be used. I mean, if you build a will or a trust, you can define how people use this income. But now you get to control how this is used, and you can pass down the income, but also pass down the assets. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.